All right. Hey there, hey there, hey there. Let me see if I got you all in here. Hopefully, you guys are doing all right. Chris Franks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time here on Friday, the 14th of April, 2023. Guys, I'm here just north of Houston, Lake Conroe. Hopefully, you guys are doing all right. Man, oh man. So we've got, what do we got? If you're in the U.S., we've got taxes coming up, right? So don't forget to do that. Normally it's April 15th. April 15th happens to fall on a Saturday, tomorrow. And so the law then states it will be the next business day, which actually happens to be Tuesday because Monday is Emancipation Day, which is celebrated there in D.C. So it's a holiday. So you have until Tuesday to get your taxes in. But if you're like me and you kind of put it off a bit, you can get an estimate going and submit it there. You still have to submit it by Tuesday, on Tuesday there. But you can get an automatic extension until October 15th. And so in doing that, what does that mean? It means that you're not going to get charged a big penalty for missing the filing date. You'll pay a very small interest on anything that you owe for each month. If you don't do that, file either your taxes or the extension by Tuesday, then you'll get smacked with a big penalty generally and a large monthly interest rate thing going on. So, what I do is I estimate my taxes. I turn them in, the day that they're due there, and then I don't worry about it until October. So, yeah, man. So that's kind of where it's at with that. Also, hey, listen. We do have tomorrow, in case you guys have been sleeping somewhere, the Pivots Points Master Course is going to drop tomorrow. It'll be tomorrow evening, guys. I hit the PM instead of the AM on when it goes live on the site on the new platform because I'm just getting used to it. And unfortunately, there's no way for me to even change that. I guess once you set it in and you sell one, it sticks. It won't let you change it. So anyway, yeah. But it'll be there tomorrow. Right now, you can get it for $49 through the end of today, through midnight. If you don't do it then, guys, it's going to be $499 starting tomorrow. But there's also the Pivots Points. That's the master course. We have a master course bundle that we're going to do. And today, my guest is Fibaswani. You guys know him, I believe. If you don't, stick around. He's a great guy. Has a lot of experience like myself. He's a professional analyst for a company. But anyway, he works with us as well. And he's going to throw in a bonus Fibonacci master course if you buy the bundle. And of course, I'm going to have a bonus Hearst Cycles master course in there, as well as the monthly drops for the next 12 months. I'll have a different master course each month. Plus, you get a week of Tier 3. And guess what, guys? I'm working on an indicator right now. It's a little bit slow coming, going, but it's really kind of getting there. It's based on the way that I look at markets. And I'm really considering actually throwing that in as well. Even without it, you're getting like $7,000 worth of value for $499 for the Master Course bundle. But that would just be something else that I may end up throwing in there as well. I'll let you guys know, okay? So anyway, we've got all this going on. Who's here already? We got Brian Riley. What's up? Michael is here as well. Toby, C-Mac, good to see you. Dancer Eddie, what's up, man? I love seeing that name, man, because I'm a big, I grew up, in the 70s and the 80s, and I'm a huge fan of, this may not have anything to do with your name there, but I'm a big fan of National Lampoon's Vacation and Uncle, Eddie. Anyway, so it makes me laugh every time I see that. What's going on, Data? Weiss is here too, man. Weiss, man, what a great guy. If you ever get a chance at one of these events to meet up with Weiss, man, he is a fantastic guy. we ended up taking a cab back from Vegas back in, what was it, October, when I was doing a show over there with Scott Melker. And man, we took a cab ride back. Absolutely amazing guy. A lot of fun, really nice guy. So if you get a chance, guys, say hi to him anywhere you're at, right? 3-Day Death Cross, what's up, man? I did see your email in the thing, and I bet you that's about you bought the course with Bitcoin, right? So I'll get you set up today, man. Let me see here. Wazobia Dollars, what's going on? Good to see you as well. So anyway, one more thing, guys, I guess. If you follow me on Twitter, you might have seen a little tweet exchange there with me and Scott Melker, Wolf of All Streets, right? And so it looks like we're going to be putting together a show for Wednesday mornings that he and I will do. I have no clue what it's going to be yet or how it's going to be, but I just kind of mentioned, man, it's crazy that we've known each other for so many years here and we've never actually done a show, like a consistent show, right? And he's like, well, you free Wednesday mornings? And I said, well, shoot, I'll make some time. So more exciting stuff for you guys to see there, right? Let's see here. We do have Mr. Fibaswani in here. I got him right as he was getting his water. Perfect, right?
Yeah, perfect timing.
Good to see you, man. How you doing today?
I'm doing pretty good.
Yeah.
Hanging in there.
We're fortunate enough we're getting him, I believe, on his lunch break. So this always works out pretty well when we do this. As you guys know, we're going to try and get this done every other week. Last time he had to bow out because he had family things he was doing. So, always that. But yeah, we'll try and have Fibbo on here every other Friday because that works with his schedule. And hopefully you guys are good with that, right? Hey there, Diego. Good to see you. All right. So, man, crazy week, right? So I say crazy. I guess maybe crazy if you're a bear, right? Because Bitcoin and Ethereum just kind of really just kept moving up this week. How are you feeling about it, man?
About the move to the upside?
About Bitcoin and Ethereum in general. How are you feeling about them?
No, I think the patterns are doing what they're supposed to do, and that's what I like to see. So when you hit certain support levels and certain resistance levels at a good timing and a good pace, it's a good sign. So I like the way we're seeing things, and I think that just moving support up higher and higher, and keep shorting people because the more shorts out there, I'm enjoying it.
Oh man, yeah, and so here's the thing, guys. This is something I've talked about often, just in markets in general, but especially with Bitcoin because it tends to move so hard, so fast when it does, and a lot of times this happens at the end of bear markets, and you'll get these overextended moves up, and basically it seems like everybody's like, okay, I'm going to wait for it to pull back, but it doesn't ever really seem to pull back, not until it gets, I've shown it before, usually around 61.8, right? Usually when you're getting up to that 61.8 retracement of the entire bear decline, that's about the time you kind of hit your first, if you're doing Elliott wave, your first wave, and then you finally get the pullback. And so this lack of pullbacks along the way that we like to see to give us a chance to get in really becomes unnerving if you're new to markets or even just the Bitcoin market and you're not sure what you're doing. So, that doesn't mean just ape in and don't worry about it. This is still trading, guys. This is still trading. You've got to actually have, a good thesis for getting in. Wherever you're getting in, you've got to have a stop loss that makes sense. If you're not doing that, guys, you guys come in, and I know because I was there a long time ago. When I first came in, you guys know my story. Doing everything that you guys have done when you first come in, right? Looking to get rich quick and all this other stuff. And then I had to learn that isn't the way to do it. That isn't going to make it. And so it was at that point that my real journey as a trader began. Threw a lot of money and wasted a lot of money at the beginning. But, when you first come in, you're often looking for the secret sauce, the special thing, right? And usually we think, okay, what's that golden goose? What is that thing? And we always think, okay, maybe it's this system that we're going to try and use, right? This thing that's going to tell me, if that's going to tell me just exactly where to enter and where to exit. And the reality of it is, guys, the real secret sauce of trading is risk management. It's the boring thing that nobody wants to do, but it's the one thing that makes you the money, okay? Other than that, the only things I'm going to tell you are you're going to lose money at some point as a trader, and you're going to lose it consistently at times. It happens. Again, that's why risk management is so important. The other thing is, and I think the longer you're in the more this becomes, the more you understand this. But when you first come in, you're looking for your entries all the time. It's always, where do I enter? That's like the topmost thing on your mind. But the reality of it is, there are two things more important. One is risk management. Two is your exit. So there are actually studies going on here. I've got some, and I'll post them on Twitter when I get a chance and other social media. But basically, the studies went back and they looked at just random entries, and then they looked at the way that you exit, and they found that the way that you exit actually had more of an impact on how much money you made or how little you lost than your entry. So just some things to keep in mind, because again, I remember when I first came in 25 plus years ago, and that was my thing. Where do I enter? How do I enter? And it took me a while to figure out. It's really all about the exit and the risk management, guys. So let me see here. Michael Johnson, what's going on, man? Oh, you didn't miss anything? Fibo's here. So he's going to talk about some charts with us. Frank, good to see you. Kimasabi is here as well. Kimasabi says, what did you say here? Fiboswani's call for April seems to be coming. And I think he's referring to I think you had like a time-based call for a certain level.
Yeah, I'm going to take that call as a win. I won on that one. No, it was back. I was on Crown Show back in, I think it was in early December, like the first week of December. And when I go on his show, I look at a lot of macro stuff, and I'm actually working on some more stuff. So I talk with him at the end of the month, because everyone's going to ask, okay, well, April hit, now what? It's always the now what,
Yeah.
So I'm doing some analysis to figure out, another timing possibility. But yeah, I was saying that it would be minimum of 30K by the end of April, with a possibility of being 35K by the end of April.
Man, fantastic.
Yeah, it was beautiful. It was when the market was at 16.7, 16.9, somewhere right around there. And that's when I backed the truck up and said that I'm going to ride this thing to April. And actually just took some profit literally at 31K nice. Like hours ago. I mean, to be honest, or, this morning or somewhere right around there. So that's the call he's talking about. So I like it. It hit. Now we got to figure out what's next.
Yeah, exactly. Right. It's always, especially in social media, it's what have you done for me lately? It doesn't matter that you did that. That's fantastic. Now, what are you doing for me now?
Yeah, you've hit the last 5 calls. What's the next one? That kind of thing.
So I guess we'll just start out here with the DXY. Let me pull up a chart here. Which one am I looking at? I've got a specific chart I actually wanted to look at. Give me just 1 minute, guys. I thought I had it loaded up here, but it appears I did not. Let's see. Is that the one right there? Come on, baby. I believe that's the one. All right. So let me go ahead and share this. All right. So, so here we go. So the DXY right now, guys, that's the dollar index there, right? So it's the dollar weighted, the dollar pairs, basically, right? So it's a weighted index. It takes into consideration the Euro USD price, USD yen, USD Swissy, all the cable USD, all these kind of USD loonie, right? USD yen. And it weights them, and it gives an average, a weighted average, to the dollar, right? And so basically, you look at it, you go, okay, is the dollar really rising or falling against basically the world, right? Just when you're looking at at these big economies. And so when you look at that, the Euro USD makes up about 59% of that weighted value, which is why most of the time your DXY is going to look a lot like the Euro USD, just in the opposite, right? So you would have it flipped here over here with the Euro USD. Now, the next biggest one is the USD yen, which is about, I don't remember, what is that, like 11 or 13%. So between the two of them, the entire weighted average of the DXY, those two make up 70 somewhat percent of it. So basically, you can look at the Euro USD and the USD yen, and if the USD is using value against those two, then generally you can expect that the DXY is falling, right? Now, why is this important? A lot of people get in here and they think that the DXY is going to tell them exactly when you're going to see price turns in the markets, whether it's, Bitcoin or stocks or whatever, or gold and all that. And it's not that. It's not exact, right? Again, it's a weighted average. So sometimes you're going to see things move lockstep with the DXY, but you have to look at the bigger picture, generally what's going on. If generally, right, if you have, this downtrend here, then even if in certain areas, maybe, you've got, Bitcoin and DXY rallying here or something, right? What you're looking for is overall, is this coming down and that other asset you're looking at going up, or the opposite way around. And that's generally what you want to feel about it, guys, right? So use the DXY not as this thing that tells you, oh my God, things are going to reverse right this second or change direction right this second, but better use it as a general understanding of where price is likely going. And that's because it affects the pressure on price, right? So as the DXY rallies, as it goes, higher and higher and higher here, what it does is it makes the dollar more valuable against other currencies, right? Against other assets as well. And so generally, if you've got the DXY rallying, it takes less dollars to buy that thing, right? And the same thing if it's coming down the other way. If it's dropping, it takes more dollars to buy that thing. And so you can kind of use that to understand, whether there's more or less price pressure being placed on whatever asset you're looking at. But nonetheless, somebody mentioned this last time, I believe, and I'm not a big fan of patterns like the head and shoulder and the cup and handle and whatnot. But and the shoulders here are kind of small, but generally, I mean, you could potentially be seeing this as a head and shoulders pattern here. And so if we look here, we've got this low over here at 100.788. And, that's below this 100.82 right here, right? So you've got this neckline right here of the head and shoulders, a slightly declining neckline, right? So you have your left shoulder, your head, your right shoulder. Now, the idea is if you break down, break down and close down below it, the idea is that the target, if the pattern is correct, the target based on the height of the pattern, that means you take the head there to the neckline and you put that at the point of breakdown. This is how you do this properly here. Okay. So if it were to come on down here, that gives you a pattern target down here at around 88.745, which gets us, you see where it gets us over here? Let me throw this on here. You see, I'm going to do this and I'm going to show you this close up of that candle right there. We're kind of doing this right here. Now on the rally up, you can see that you have this big candle, then this large candle down the other way, and then big candle back up. This, and you went up. So this is demand right here. And that's why when you hit this area, it found support and rallied back up, right? Got it right above here as well. And here we come with a target right in there. So, if you're going to buy that is a head and shoulders, then on an impulsive breakdown, that's where you should be looking. Me personally, what I find most interesting about this using pivots is that we came on down between the pivot and the S1 here. We attempted to rally, huge rejection, made a new low, came back up, peaked up just barely above it, and then just fell back down, and now again below the swing low here. So this area around this weekly pivot is holding as resistance. So my thought is, when we get a rally up here, it's likely to find resistance here, again, at this kind of area around the pivot, and then fall on down. And I'm looking for it to get just generally down to the S1 pivot. And basically it would look, my overall idea would be this thing that would come on down toward the S1 pivot, rally back up to the weekly pivot, get rejected, and then kind of continue down further. So, I mean, that's kind of what I'd be looking on it. What kind of chart do you got for the DXY there, Fibbo?
Yeah, no, I got something similar. I don't really follow the patterns like the head and shoulders and those kind of things. I'll look at them for maybe some validation. But let me pop mine up here.
All right. What's going on, Dan? Good to see you. Bamboo is there as well. Deadly123. Brian Riley asked, do you think that we've what'd you say there? Do you think we've just seen the DXY at a generational high that won't be repeated for a while? I think that's a good possibility. I mean, overall, we really need to see it kind of move down further, but I think that is really quite likely at the moment. So yeah, go ahead and go there, Fibbo. What you looking at there?
Yeah. I got something pretty similar, but the way I attack it, of course, I look at the different zones on the RSI, and when we went into the bull zone here back in November, basically the beginning of November in 2021, right around this area right here.
What price level was that?
I'd say right around 93 or so.
Okay.
And once we went into this threshold to the upside here, what I have to do based on my stuff, I have to go to the ADX and figure out the first positive change over change, and that's where I actually start the fibs, because to me that's where the threshold changed, the psychology changed from a bearish market to a bullish market. So I start my fib at that level, and if you take it all the way up to the high, the 61.8% level is this key support that's being tested a few times right at this point, which is also the neckline of what you're talking about when it comes to the head and shoulders pattern. But we went into the bear zone here, and then setting the fibs going the other direction. What I look for is 3 consecutive settles under the previous shallow fib when it goes into the bear zone, and as you can see, it had 3 settles underneath once it got to this candle right here. So that's where you would actually sell it, and that would be your key resistance point going forward. And now we're testing this key support, but momentum for me is still pretty good for the bears at the moment. So I'm, when you look at it from a long-term basis, it has a good chance of breaking down. And this key support is that first target. So if you were selling it here, and trading it, you would have sold it at the key support or bought it back, sold it back again, and then you could trade it again if you wanted to, or you can continue the trend to the downside. And there's 2 things here. One, once you get 3 consecutive settles underneath the 61.8% level on a weekly basis, so we need 3 weeks underneath 101.44. Then this second target comes into play, which is the full retracement of where my threshold change is, and that would be that 93.20. I think it is. I can't see it on here, but 93 and change as that second target. So to me, from a long-term basis, that's where I would technically want to get long, or possibly getting long the market. So right now, I think there's a lot of market opportunity to be had to the downside on a long-term basis. So as long as we're in the bear zone and the ADX is inching higher, it's still not at a level I'd like to see. I'd like to see it get back up to like at least 25, get into that 25, 35 range to really get some selling interest back into the market. But I do like the direction it's taking. So it is starting to pressure that support. So if we get enough selling interest and enough momentum on it, then we can pop it, and then all of a sudden you're going to break, and then you're going to get into an area that to me is going to be a very low to no support until some of these other order blocks that you saw back in history here. But I'm pretty similar, but I'd be buying a little earlier, probably around this 93.20 and not waiting for the 88. But the 88 to me comes back from some of these other back areas that I had on this fib extension right here. We had a little bullish divergence, and this was a buy area for me based on my threshold theory before it got into this bull run. And then it went, and then now we're back in the bear zone again. So everything's working pretty well. So I'm pretty similar to what you're looking at. I'm probably just buying a little earlier than 88.
Yeah, I was going to say that target that you've got there actually is almost dead on with the S1 pivot there on the weekly. That's the S1 pivot's right around 93.7 or 8. So, and you're talking about 93.2, so it's right there. Yeah.
Yeah, perfect.
Yeah, I mean, that's fantastic. I like that. And what does that mean for us guys? That means that overall we're expecting the dollar to continue to drop in value, which means less price pressure on risk assets. Again, giving them more of a chance of actually rallying. So I think that's a great setup there.
Yeah, from a primary trend perspective, for sure.
Yeah, exactly. Obviously, smaller things, more interior guys, but we're talking about the bigger trend overall here. So if you're wondering about, is Bitcoin going to continue up, or is it this just a bear market rally, right? That falls to a new low or retest the swing low from November? I don't think we get anywhere near that at this point. So yeah, I mean, I'd like to see that. I've got a question here. Kimosabi is asking you, have you ever found fibs useful on the RSI?
I've played around with it a little bit. I've read a few books by Constance Brown. She does a lot of stuff with fibs on indicators. Um, I couldn't find anything consistent that I liked to where I could put it into my stuff. Not to say that it's not useful. I just couldn't find anything that's consistent for my liking. But that's about it. I tried in the past and never really looked at it again because I couldn't really find anything from it. But I mean, I know there's people out there that do it and do it successfully. So if you want to read up on it, I know Constance Brown does a lot of stuff with fibs on different indicators.
Yeah, so there you go, guys. If you're interested in that sort of thing, check out that particular author there. I'm the same way. I don't tend to use things, and I think again, Fibbo's been doing this for quite a long time as well. And I think you just kind of get to that point as a trader when you're real consistent for periods, for long periods of time, that you just kind of get in there and you don't really. Well, you look for things that generally work, right? You look for things that work most often. There's nothing that works 100% of the time, but what you're looking for is you're looking for those things that historically have told the story of have stood the test of time kind of idea. I know it's real popular on social media and whatnot to kind of jump in there and say, oh, I'm a contrarian trader and whatever, but first of all, most people saying that don't really understand it. What they say is, oh, my curated Twitter feed, for instance, shows a whole bunch of bearish people, so I'm going to be bullish, and that isn't really what it means. But even for those that do, you shouldn't be contrarian just to be contrarian, right? You're looking for real reasons, just like everything else, guys. I think too many people kind of come into trading and they see it like a scratch off ticket, right? Like a dollar scratch off ticket. And they're like, woohoo, let's just go YOLO, right? And then they get really upset when they lose money. But the fact is they're not really approaching it correctly. But when you do, guys, when you do, and you're kind of really paying a lot of attention to real proper risk management, looking for higher confidence trades, those things that have more confluence, right? Maybe you've got an oversold RSI with a bull div. That's a higher confidence trade. Still doesn't guarantee that it's a reversal. You might just get a bounce out of it. But, it's a lot better than just entering because RSI dipped into oversold, right? And so, I think the longer that you trade, the more you start going from these really crazy YOLO things to a more tried and true method and system that really utilizes a lot of things that you have seen are consistent over time.
Yeah, and another thing to add there is when I look at fibs on the charts, on the price charts themselves, to me it's all about the proportion. It's not about the price.
Yeah.
So when you're going into an RSI or indicators, you're looking at a derivative of price.
Yeah.
And I could never really find a good proportion in the indicators themselves going out on a derivative like that. So not to say that it can't happen and you can find ways of working in some kind of strategy, but to me, the fibs are all about proportion in that price. So when you get a derivative of price, I think it kind of throws off, at least from the methods or my mindset of how I approach it. So I could never really find anything with it. So that's just me, though. Good luck if you can find something. That'd be awesome if you can.
Right. Right. But I think you said something fantastic there, man. I think you said something fantastic. It's something I always refer to, which is RSI is a derivative of price and stochastic RSI is a derivative of, RSI. So,
second derivative.
You what?
A second derivative.
Yeah, a derivative of a derivative, right?
Yeah, exactly.
Which means you're going to get greater movement relative, right? RSI is based off price. Stochastic RSI is based off RSI. So, I think it's important to recognize these things when you're using indicators because otherwise you'll jump in with something that's a derivative of a derivative of a derivative, and you're going to get a much larger swing or a much quicker swing than what you normally expect. And, again, you're maybe looking for some more smoothed out movement, but you're trying to base your movement on this derivative of a derivative of a derivative, which means you're going to get a lot more chop in that. So and
it brings out emotion too, because if you see something like that move really strong, you're like, oh goodness, we got to get going and doing something. And really, you don't need to. You need to validate it against some other things. So, but go ahead.
Yeah. So is that Marty Tom? What's up, man? It says, would you say trading is your main source of income, or is it rather the education business? If you're directing that toward me, trading is my main source of income, which is why I do, crazy sales quite often, it seems like, because, again, that's where my income comes from. We do make a little bit on business. I have to try and be profitable with the business because I do have people that work for me that I have to pay for, I have to pay. And if you're in business, the goal should be to make money anyway. But yeah, for me personally, my trading is where my greatest source of income comes from. Now, Fibbo, he does his own trading. He has a job for a company that he absolutely loves and a job that he loves, and he's really worked his way up through it. So it's hard to beat that,
Yeah,
but he
my
also
answer is
then does his
both.
educational thing. What was
Yeah,
that?
my answer is both.
Both, yeah.
Yeah.
Yeah, when you're a trader working for a company and you've made your way up there, I mean, they're willing to pay you. It's hard, and then you got benefits and all these other things. It's hard to to kind of pull away from that.
Yeah, I mean, I love technical analysis. I've been doing it for a long time, and if I can keep a job and if I give good information to people that need it, and I get to do what I love doing,
Yep.
it's really hard to leave. I mean, I wouldn't want to leave because I enjoy doing it, and then moonlighting on the side, I get to do educational stuff and my own trading. So it's kind of both. I'm more at the point in my life of paying it forward, giving wisdom to others that might help. Because I wish I had someone like me
Yes.
20 years ago when I first started. And now that I'm in this position, I feel like helping people is it just something I enjoy doing. So
Yeah, and I think that's
and I feel like
fantastic.
that's what you do, and that's why I joined up with you.
Yeah, man. Well, and I think it's fantastic you say that because I don't think we see it as much now, but when I was first starting up the company as I was leaving law school, finishing law school, there was a lot of, oh well, if you can trade, why are you wasting time, teaching other people? And there's a couple of things on that. One, I'm an entrepreneur first, so I've run created various businesses. I get a certain satisfaction out of that. I can't just sit around. Because if I'm trading, I could be done trading in 30 minutes or an hour in a day. That leaves me the rest of the day to just sit there and kind of, just twiddle my thumbs. I'm not really good at that. Two, I don't necessarily believe in altruism. I believe we do things because we get something out of it. And that's not a bad thing though. And so for me, if I can help somebody learn how to trade and they come back and go, oh my God, I just got it. It hit me. Now it makes sense. And it's helped my trading in this way. Well, I mean, that's fantastic. I love that it's helped you, but I'm going to be honest. That's a big boost to me. I enjoy being able to help somebody figure it out because, like Fibbo said here, when I first started, and when he first started, I mean, things were a lot different, guys. Internet was just kind of getting on there. When I started, it wasn't even AOL hadn't had its unlimited monthly fee yet.
I was
So
throwing I was throwing paper around in the pits
yeah,
before computers. I'm old.
exactly. See, and so information was a lot more difficult to come by back then. Again, my first thing was an actual physical newsletter that I got in the email that I got in the mail. That I got in a physical mailbox. Some of you guys may not know what that is. That I paid like $200 a month for. It was like 5 or 6 pages. And so you guys come out today and you just have all this information at your fingertips, which is crazy. I would never have imagined that. The other side of that, though, unfortunately, is because you're just learning, it's really difficult to discern what is actual truthful information out there. So a lot of stuff online are half truths and outright lies. Not because people want to necessarily misinform you, but just because they never really learned it. Their goal is just to sell you something. And so they just kind of copy whatever they find somewhere else. And a lot of times, if you don't know what you're doing, not just with trading, but anything else, it becomes really, really difficult to figure out what's true and what's not. So, guys, just be careful there. I'm not saying you got to join us. We'd love to have you, myself or Fibbo. But I think both of us, at the end of the day, we just want you to make sure that you're a conscious consumer out there, right? That you're aware of the fact that what you could be seeing may not be what it seems to be. And that's going to take some work on your time, on your part to go through that. But, again, if you want to skip through that, of course, we've got great stuff to offer you. So let me kind of jump on here with with the Bitcoin chart here, right? Let me see here. Dan says, we appreciate that you guys are helping us through education. I've been looking for data to trade off so that I can eliminate as much emotion as possible. Yeah. Again, And emotion is something, guys, we're human beings. Emotion just happens. It's part of being a human being. It's not easy to overcome, but if you do it correctly and you practice it consistently, it becomes easier to deal with. Not easy, but it does become not as difficult, okay? Hey, Mark, what's going on? Hank, I see you guys here. You're struck by the accuracy, Dan says, of Fibbo's TT system, his threshold theory. I only lose when I don't follow it and trim as targets are reached. See, there you go, guys. But again, his style is something that a lot of people have to wrap their head around, right? Because a lot of times when you come into trading, you want to trade all day long. You want to make profits every 10 minutes. And I'm going to tell you right now, guys, it's really difficult to do that.
You definitely won't get that with my system. It's a swing system, and it teaches patience.
Yeah.
and sometimes that's a tough thing in the trading world is waiting things out. It's a tough one. It's a tough one for sure.
Yeah, but it can be done, guys. And that's the thing. And so whether you're with me directly or with Fibbo, we welcome your questions, guys. The way we see it, you're paying us if you're in with what we do. If you're in Discord there, and so we definitely want to help you out as much as possible. But even on these live streams and things that we post on Twitter or whatever, the goal is to hopefully help you get some sort of clarity. Okay. So so what we got here, guys. I've got this Bitcoin chart. These are a couple of things I've shown over the last few months. So we do have this interesting here on Bitcoin. We do have this this pitchfork here. Man, it's doing this again. It's not. I don't know what you guys, but I've been having trouble with. See that right here? It's not even letting me pull the settings up on this with TradingView the last week or so. But anyway, I don't remember which pitchfork this is.
I can't tell.
What was that?
What is that? A monthly chart or a quarterly chart? Or?
Yeah. This right here is a quarterly chart right here. This is 3 months.
Okay.
And so look at this huge movement up here after the finish here. You had kind of this if you zoom into the monthly or whatever, you'll see you have kind of this wedge coming down here, and then you have this big first quarter of this year, this big candle, right, which carries us above that pivot there. And so, I mean, based on this, I see possibility that we could get this run up. Maybe to the 50 or even, 50 and 55,000 or so kind of area before we even get a pullback and do it. The important thing about this, though, is that you still have people out there looking for 25,000. And that's why I like to show this chart, because as I was talking about at the beginning, Bitcoin kind of gets on these rants and these runs, especially right out of the end of the bear market, the end of the bear decline. And people consistently wait for those logical pullbacks. 25,000 is a logical area of support. But if this thing continues to rally and breaks up toward 35, 40, 45,000, guys, we're not going to 25. And people are going to be sitting there waiting for that. So you have to kind of adjust your approach. You have to, zoom in, obviously, smaller time frame than the quarterly here. But, you've got to understand how you can enter and where to properly put a stop loss. And then just to understand that you may or may not be correct. And that's okay. Trading, you are not going to be 100% correct, guys. I'm going to tell you, I'm somebody that's done this for almost 30 years. I'm going to tell you, you're going to be wrong a lot. You have to get comfortable with losing money, but not to the point where it's just like, oh, well, I lost it. It's fine. You want to, limit that as logically and as intelligently as possible, which again goes back to the whole idea of proper risk management. So we've got kind of this quarterly thing going on here. And then I had this other chart, and this is the one where we were using to figure out where the bottoms usually are. And then we had this bull div here, to the swing low in November. And so importantly on this chart, what I like is we've got this year-long descending resistance, which you can see that we broke out, retested as support, retested again and broke out, right? Interestingly, this resistance right here, this ascending resistance, is actually where we found resistance before support, resistance to support, and then broke out through on a spike of volume, large candle spread, dojis across, holding support, and here we are with another big candle on the monthly here. Now, of course, this is the monthly. We're only halfway through the month, so anything can still happen, but you don't need a lot on your chart to understand how to get on there and trade, right? And with those supports and those resistances, I mean, the fact that we broke out of that long downtrend, I mean, I think if you're still bearish, I mean, I'm not trying to give you a hard time or anything, but honestly, at this point, it really doesn't make a lot of sense. As somebody who's been doing this for a very long time, 100+% rally. It's been going on for 5-6 months. I have somebody online that was talking about that they thought this was a bull. What they call it? A bull market or a bear rally, a bear market rally, and then they compared it over here to this move over here, right? And they said, "Oh, that's just a bear market rally." Well, again, guys, I told you it's the 61.8 retracement, right? So if you take the swing low to the swing high, actually, this is a 78.6 retracement is how far that went, right? Guys,
Yeah,
listen.
on the wick it did. Yeah.
Yeah, I mean, that's 78.6 over the course of 196 days, guys. That's over 6 months. That's not a bear market rally. Right now, we're over here, right? And here we are, and we've only rallied so far. Let's see here. Right there, we haven't quite hit 50% of the downtrend, right? But we've gotten almost 50%, and we've been been rallying here right off the low, making higher highs for 140 days, right? So almost 5 months, something like that. Wait, December, January, February, March, yeah, April, yeah. We're getting on to 5 months here, right? So in case you think this is a bear market rally, the generally understood definition of a bull market is a 20% rise after a lengthy decline, a 20% rise that goes for over 2 months at least. This is what the SEC uses with its definition of it, right? So, again, it seems kind of crazy sometimes with Bitcoin because we make such big movements and whatnot. But again, the idea that we've moved 100+% over the last 5 months and you're still calling a bear market rally means that you're probably being really much more emotional about it. So Fibbo, man, what do you got on your?
Actually, I got a couple charts that kind of go along with what you're saying.
Okay,
Let
put
me
you on there.
uh, let's do this one. Where is it? This one's pretty basic, but I just wanted to show something that I do as a technician, as a easy guide. But when you look at these trend line breaks, if you just take the furthest point underneath the trend line to the trend line itself and take the same rate of change from the break point, it gives you targets. So if you see this one here, it broke down to this point and got here. Now it's not exact, but it gives you a target to know once it breaks here, as long as resistance holds, you got a target to the downside. So on this blue one, it broke up. On the red one, it broke down. Kind of exact. But this is the one I'm kind of interested in. Is the one that we just broke here, and it's kind of the one you were showing on your chart. If you just take that same rate of change, it puts you right around 50K or so.
Oh wow, wow.
So and it did what it, like you said, it breaks up, it comes back, finds that support, and then starts taking off. I don't know about you, but I've learned from technical analysis that that's a bullish move. I mean, it's
Yeah,
just
yeah.
generally a bullish move. So, but not to say that it'll get there, but when you look back at history, just based on these trend line breaks, probability is pretty high that it could start continuing to that way. Are we going to be at 50K tomorrow? No, it might take some time, and timing is a whole different issue.
Yeah.
But that's just a basic look. But then another one I like to look at is,
Well, real quick before you do this, man, I just want to say I love what you just showed us there because, again, I've been doing this, 27, 28 years, whatever. I've never actually seen that. And this is what I want people to understand. You should always be trying to seek out new ways of looking at the charts and markets because you're not going to know it all. And I just learned this right here. And I think it's absolutely a fantastic thing to look at, and something I'm going to be looking at from now on to see how that plays out. So, man,
yeah,
I definitely appreciate it. And hopefully everybody else is catching on that as well.
and a lot of times it's a minimum target, because like this blue one here, that broke to the upside. It had a target here, but as you can see, it broke out above, and then it came back and hit as support,
Retested it, yeah.
went up, and then it retested that same level here before taking off
Wow,
higher.
wow.
So this was a minimum target, but if you were playing it, most likely you would have been selling out, buying back, selling again, that
Yeah,
whatever.
yeah.
But I always look at it as a minimum target. The interesting thing is a lot of these other ones kind of hit it almost exact. This is the only one that continued.
Yeah.
But we'll see. And I'm hoping that maybe this one's a minimum. And then it just keeps going
That
higher,
would
right?
be nice, right?
That would be nice, yeah. But the other one I was looking at is kind of this. I put a sine wave in here because I'm all about psychology, and you are too. And I kind of like to show people what I'm kind of looking at. So when you do this sine wave I have in here, you kind of come into these lows, which came down in here, and then you kind of get into this peak positive mood. You know, your overconfidence up in this area, kind of hit a double toppy kind of thing. And then we swung back down below again, and you get into this decreasing mood and the negative mood. When we were down here, everybody's thinking, "Oh, we're going to 7,000."
Yep.
I
Yep.
heard everything under the sun. And not to say that it couldn't have went to 10,000 at that time. It definitely could, but indicators were starting to change. We broke this trend line, and then we're starting to swing back into maybe some increasing mood, some optimism, and then maybe we get back into the peak positive mood. You know, when we hit um, the what am I thinking of? The halving when we get into 2024 and those kind of things. Um, and this dotted line was just my April, by the end of April, getting above the 35K on this trend line. But taking what I showed you on that on this chart, just looking at trend lines, if you take the one we broke here, this one, and then you get the break point of this line right here, it takes you up to that 48K or so.
Yeah.
And that's that 61.8% level off of the high and low. So that matches really nice. But the thing is, if that's going to happen, it's going to break this trend line, which would give us a further target up into these extensions over and above the 69 previous high, and gets us up into the 83 to 91K,
Yeah.
which could give us, up around that halving time, as a possible target, maybe even further if it wants to continue further than that. But I like to say if this trend line breaks, which it did, and then and that target's above this trend line, and then you got this one, I like how it just kind of goes in succession as we're getting into the increasing mood and a possible move all the way up to the peak positive mood once again as we
Yeah.
get down, and then before we start going into another trough. So
That would be crazy, man.
yeah. So when I look at it on my chart and putting my bull zones and everything else into play, the bull zone happened basically right at the time. When you look back at history, it happened right when we broke this trend line, and that's where that 50K or 48K or somewhere right around there. I kind of roughed it in on a few other things, but I also looked at the troughs here of when the trough happened here. It broke
Mhm.
the trend line to the downside. It also on the trough here, or on the sine wave here, we had a couple breaks on some trend lines here, and then we came back down to this point where it broke here, and then we swung back up, and then it broke down. Now we're swinging back this way, and I'm thinking that's where one of my timing issues was around April. So
Mhm.
if we get up around this point where we're breaking up to this point, that's where I think, we're in the bull zone. This is a weekly chart. We had the bullish divergence that happened toward the bottom there. If we can break out to this point, that's what I'm kind of wanting to see, going forward. And then as I do some more analysis, I'll figure out some more timing stuff to figure out where we could be headed later
Yeah.
on. I haven't quite finished all that
Hmm.
yet, but that's basically this chart here is basically this one showing where the psychology is.
Gotcha.
Basically, is what I'm trying to show. But that's what I had for that, and kind of goes along exactly what you're saying is like this isn't a bull trap. This is not a bullish move in an overall bearish market. We flipped to a bullish market a little while ago.
Yeah.
Now, can it break down and correct? Of course.
Yeah.
And it might be already getting to that point where we start to correct back a little bit. But that's when you get into the earlier time frames and start looking at those instead of a weekly chart. But that's what I had for that.
No, I
So
love it, man. I love it. Man, it could be kind of crazy getting a new all-time high before the halving. Again, but if we look at the structure coming from the 2018 bear market low around that 3,100 area, just the rally up to the June 2019 high there, where you hit that 75%, the 78.6 retracement just above that. I mean, following after that, we had the COVID low, which was, kind of exasperated there by the BitMEX liquidation engine. They had to shut that thing off to keep it from moving down lower there. And then the move to the double top kind of area. I mean, so the structure is, continues to morph from what it's been, previously, at other previous all-time highs, in the cycles. So, I mean, yeah, I generally, would expect it not to make the new all-time high until after the
on
the thing.
timing on that, I don't know if if that would happen or not. I'm still thinking that all-time high could be pushed closer to the halving or after the halving.
Yeah,
It's still a case,
for sure.
especially when you start looking at different patterns and stuff. But yeah, I'm not ruling it out, but I'm with you when it comes to a timing aspect. That 69K might not happen until close to halving or a little bit after halving, which is April of what, 24.
Yeah, and end of March, beginning of April,
Yeah.
somewhere around there,
But
depending
I
on where
mean,
you're looking online.
but anything can happen. I mean, when you bring in other buying interest that's not in there yet,
Exactly.
you'd be surprised on
As
how
I always
quickly.
say, price is going to do whatever it's going to do.
Yep.
Too many times people come in to trade it or to invest in it, and they think it has to do whatever they emotionally want it to do. But at the end of the day, price is going to do whatever it's going to do. So, again, the goal is always to have an idea of what we think may happen, but to be humble enough to say, okay, I'm going to trade whatever actually happens, right?
Yep.
All right, let's jump over here. Let's look at some gold here. I've got let's pull this gold chart up here. So anybody's been following me for any length of time knows that I was thinking about the I was looking at this going, okay, maybe we might have like an expanded flat here. And then as we got to this move off this low here, I looked at it and said, well, I think it looks like, this was such a move coming off. I said, it's quite possible that this may actually be that alternate wave 4 count heading back up. And so here we are now, having rallied up. Let's see here. This is the weekly chart. We rallied up to $2,063.40, which is just a bit below the all-time high there, $2,089.20. And so if I'm looking at this, I'm thinking this is possibly around this area. Maybe it's done, or maybe it has a little bit further to go, but it completes that wave 1 up off that low. And, when we do that, of course, that then gives us this 50% pullback toward the weekly pivot, which again is what I would normally expect. This is one of those things, again, that I'll go in more detail along with other things to teach in that master course for pivots. But, when you're using Elliott wave and pivots, generally you're going to get, if you're getting, this movement down here between the pivot and the S1, and you're breaking out above the pivot there, usually that's going to be wave 1 all the way up to the R1 pivot area, and then the 50% pull back to wave 2, and then the further move. Also within that, wave 3 of 1, terminates like this, and wave 4 of 1 usually pulls back first. So what you get is this move and breakout above the pivot. So that'll get you wave 3. You pull back to the pivot for wave 4. You rally up to the R1 pivot area for wave 5. That gives you 5 waves up, and then you're 3 waves back down to the pivot area for wave 2, and then you're heading up higher there. And so again, like everything I talk about, it's no guarantee that it happens every time, but it has happened so often enough that I really took note of it. And it's a huge, huge thing when I'm looking to trade, especially because I do have that background Elliott wave aligned so perfectly, again, done this time and time again. So, these are what we usually look for. So when we look at Bitcoin right now, the fact that we're moving impulsively above that weekly pivot, it sets into motion this idea that maybe we get to the R1 pivot at least, and then pull back to the pivot, and then break out up for the third wave. Now, R1 pivot is just at least. If you get an overextension on that third, you can go up higher, and your wave 2 pullback may not actually get to the pivot. Usually there's going to be a structural area prior to the pivot. In this case, that's that 31,000 area that we're just trying to get through right now. So the idea would be we break out above that, you rally up there, maybe, like I said, you might get up there 45, 50,000, something like that, to finish wave 1. Wave 2 pulls back to that 30 area. It never actually gets to 25. And I think a lot of people end up getting caught on that. So what do you have there do you have a gold chart there, man? Oh, I can't hear you, man.
All right.
Kelly?
Yeah,
Okay.
I was just trying to update it here. Um, you can throw it up here, but right now, the bull zone hit um, pretty much right here. I put the fibs in. We're getting to a point where you'd want to be buying it around a dollar, about 1991
Okay.
or so. And well, actually, if you would have got in at the bull zone, which I haven't updated down here, but if you got into the bull zone, you would have actually sold in the fib extension at 2019 to 2043. That would have been your first sell. It went up a little higher, and then you're going to rebuy at the shallow fib, and then the next target's going to be 2139.
So what's
This
that
is
shallow fib area?
1991.70 is where it's at the moment.
Okay.
So rounding up 1992 would be the buy, and then 2139 would be the target for that buy.
Nice.
So I don't know where those where that comes in at your R1 levels or what. But I had this on the daily, and I just updated it real quick. But the bull zone is still in effect. We're in it at the moment. One trade I see one trade that happened in there. There could have been two. And then we could be on our third one if you buy the shallow fib with a target of 2139. But that's what I show, and I think I lost Chris.
No, I'm on there,
So,
man. I just kind of moved
okay.
over so people could see your
Oh,
bulls and
okay.
everything on there.
Well, I was
Yeah,
just getting
no,
ready to take over. No, I'm just kidding.
yeah, that gets us a bit higher above the R1 pivot, which is just fine. Again, the way I always try to teach people, levels are not static; they're a little bit more rubbery. So if whatever system you have says this target at this level, usually you give it a little room below, a little room above to kind of work with it. And so when we talk about pivots, especially on the weekly time frame, which is such a large time frame, yeah, I mean in gold here, if we're looking at that right, and we're zooming in here, you can see that we're just shy of the R1 pivot here. The R1 pivot sits right around 20,066. And so if you're getting the 21,030, I mean, you're just a bit higher. And so all that, it's just a bit higher. And so that works really well, right? So when you're looking at what I'm talking about, again, it's the idea that you at least get to the R1 pivot area. Sometimes, it's right around it. Sometimes it's a bit higher, or it could be even higher or more. And again, if it is, higher or more here, say it kind of gets like up here around 2250 or so. Well, all of a sudden your 50% is right around 1934. And you can see here where this ends up being on that. If you're looking at that 50%, that initial target for the wave two, right? So you get on here to this kind of support resistance flip area here. So again, it could, if it's overextending here, we could continue to overextend potentially, up there, even up there like that. And it would still pull you back. But the idea is once you get that impulsive breakout above the weekly pivot, it generally tends to hold as support, so people are like, oh yeah, it's got to go way down. And, just from my experience, it doesn't tend to do that most of the time. So yeah.
What's that? What's that next level you have up? Is it the R2? Is that
this one up here? Yeah, that's the 2295. It's just prior to the R2. That's actually would be the wave four.
Okay. Yeah, my next level up there is 2387. So I was just trying to see how close it was.
Yeah. I mean, we're kind of, and again, that's just based on the idea that it's done right here, and then it pulls back to the 50% and then goes. So any kind of potential further push up, as it maybe there's some subdividing going down on a lower level. Obviously it's going to change that a bit there. So yeah. Usually that wave four will pull back into that resistance area. So it makes sense. Yeah.
Yeah. No, that makes sense.
Let me see here. What else we got? We got, let's see here. Well, here, let's pull up this Ethereum Bitcoin chart here real quick. I don't know if you've got one, but this is something we've been looking at for a few months now. The idea that, again, we've got this huge kind of sideways here, right? So we've got this Right now, we're still in this for 700 days, guys. 704 days, something like this. This is the weekly chart. But here you go. Again, we've got this pullback for wave 2 here, which looks like it's a WXY correction there, because it would be an ABC for W, triangle for X, and then ABC for Y. We've got a great lower wick here, and we just kind of broke below this swing low from March 20th. So this swing low from a month back, all we did was dip below it and then right back up, kind of like just like a local bullish SFP kind of thing. But really, if you guys look at this again, pay attention to where this kind of support is here. Get this bigger here so you can see. Do you see how we've got resistance and support over here in June of 21, support again in October of 21. We've got the drop below and the resistance right here in May of 22. And then we have this strong candle break here. And again, as I always tell people, when you've got this support level here and you have this strong big candle, instead of getting rejected at and pull back and then pulling through, it just jumps through immediately. Usually you're going to get a pullback to retest it as support because you didn't test it previously. If it had hit this and pulled back and then broke out, it would have likely retested there and then continued higher. But in this case, you have this strong breakout, which just continued to go up. And so we were looking for a pullback, and that's what we've got here. We've rallied back up to the weekly pivot, which is actually around the 38.2 retracement of this wave 1. And so again, the idea 1, 2, 3, 4, 5. WXY here almost pulled back 61.8. I mean, there's a whole lot going on this. I'm looking right now on the RSI down here. You can draw a resistance from the RSI peak on the week of August 8th of 22. And right on down here. And we're about to cross above that. Stoke RSI has crossed bullishly and oversold and broken back out. We've got this great looking candle, which took liquidity right here. Got the breakdown traders, flipped them over. We're now above the range EQ, and it looks like we want to break above the weekly pivot there. So, I mean, I think the setup looks absolutely amazing. And that could be signaling the start of alt season. Again, we've seen Ethereum rally up. We saw some few others as well. So what have you got going on there, man?
What's your EQ price level?
The EQ right here is right around, let me see here, right around 0.0676.
Okay. Yeah, I just pulled mine up. Mine's on a daily though.
Yeah.
I'm actually still in the bear zone at the moment. The only thing I've seen so far in this bear zone is it actually hit the fib extension target. So if you wanted to, the only time I would buy in a bear zone is in the fib extension target or the 200%. But in this case, as it was down into this range, and we got the bullish divergence on it. If you wanted to scalp it, it would have been a buy and then a sell back at the shallow fib, because the shallow fib right now, since we're in the bear zone, should be a sell spot to continue to the downside. But what I would look for is a move into the bull zone, which would be above this 6602 in this case, like it did back here. But this was more just a consolidation. But
yeah.
So I'm kind of in the same thing. Once we get above, we're getting pretty close to breaking that to the upside. And to me, it's going to have to probably break the 61.8% level and get us into that bull zone. And that price level is at 0.069. So pretty close to where you're at. But that's where I would start to change some things. And then we could if we get into the bull zone, and then we could start looking at some, this would probably be a break of this trend line. We could take the measurement off of that to give us some upside targets, those kind of things. But I'm still in the bear zone at the moment. I don't have any positions on, but for me, I would buy the new bull zone on a break to the upside. But right now I'm flat and not doing anything with it.
All right, we got a question here from Dancer Eddie. He was asking you, why is your daily RSI limits for the bull zone different here? Thought it was 57.64.
On the ETH BTC?
I guess I don't know. Maybe he's thinking. Dancer Eddie, are you thinking about Ethereum USD, or this is the Ethereum BTC chart? So I don't know. Is that what you're thinking of, maybe? And while I'm waiting for you to answer there, Arrow Quinn's asking, Have we charted the Bitcoin dominance yet? I do actually have a chart I'm going to bring up here in a minute. So yeah.
Yeah. When it comes to the RSI zones, it's not an easy thing to explain. There's a lot of experience that comes into it, but it's a lot of historical analysis on each individual one. So the ranges themselves will be different based on whatever asset you're looking at, and even what time frame you're looking at. So you can get different zones based on whatever you're trading. I do
Okay.
4 hour and daily on my trades, so that's where most of my zones are. So I think you might be confused on just looking at a different Ethereum time frame or a different Ethereum chart.
Yeah, he says, I guess the question is what are the bull zone limits and how they differ across different assets? And so, like you said, they are going to differ across different assets and different
Yeah,
time
because it
frames.
takes some analysis to figure out what I'm doing is I'm going back in history and I'm doing some different analysis to figure out where that's why it's called threshold. I'm going back and getting that best fit line of where the psychology changes change the most from a bull and a bear type of sentiment. So that's where the zones actually form from.
Okay.
But depending on what time frame you're in or what asset you're looking at, there's different players, different emotions, different fear and greed in every market. So I'm trying to figure out where that psychology
Where those
change is
levels
happening
are.
for that particular market.
Okay, yeah. I mean, it makes sense. Again, guys, always remember, no matter how simple the system may seem at first, usually it's going to take you a while just to learn whatever system it is. And then it takes, as I always tell traders, it takes to become good at something, it takes discipline, it takes consistency, it takes focus, it takes learning and practicing correctly. A lot of times people, as traders, they come in and say, well, I was doing this and I've been doing it for 2 years and it's not gotten any better. And then you look back and you go, okay, well, you've been doing it wrong. So you've been learning it wrong and practicing it wrong. And so, again, it's not just enough to practice something, you have to practice it correctly for however long it takes. And for everybody that's different, and it's not a bad thing, guys. It's just, again, a lot of it's emotional, a lot of it's impatience, which comes from emotion. But if your target as a trader is a long term, if you're seeing what you're learning as a trader as some long term thing, something that you can get that's going to benefit you for a long period of time, rather than just trying to get rich next month or tomorrow or something. I think that's the right mindset when you come into trading, no matter what you're learning, because that kind of puts you where you need to be, where you focus on learning the system itself rather than making so many dollars every day. And so when it comes down to actually trading, you're focused on price levels rather than the money you're making. And I'm going to tell you right now, guys, I know it seems small, but that is such a significance when you trade. It changes the whole way that you see everything and your success level as a trader for that. Let me see here. Fibble's got another chart. What you got here, man?
Well, you're talking dominance, so I thought I'd bring my dominance chart up.
Yeah, go for it. Yeah.
Yeah. I mean, we're in the bull. I mean, this is on the daily. Um, it's it's not tradable, so it's not something you trade.
Right.
But if I apply the same concepts, we're in the bull zone at the moment. My fibs are set. The shallow fib is at 46.88%. It actually hit the fib extension target, which came from this previous high which fell within the zone that I was looking between the 127 and 141. So that actually hit. We're starting to come back down. So to me, the shallow fib should hold, and then you move further up toward the next target, which is about 53%. So that's kind of the pattern that I'm on at the moment. Now, if we get down and it gets back into the bear zone, then we topped out at 48%, and then we could look for some lower percentages. But right now, everything's finding support and resistance at the right levels that I like to see. So right now, a little pullback on percentage, and the next target would be 53%. So that's where I'm kind of at on that. So we'll see how it compares.
Man. I like that. Let me show you some here. It's pretty great you said that, because here's what I'm doing. And we kind of hit the initial target area I was looking at, but it looks like we have actually some overextension going on. And so interestingly here, right now it looks like this could be 1, 2, 3, 4 of 5 of 5 of 3, which gives us a wave 3 target up here at around 49.89. But here's the thing, you get your pullback. If you can get a pullback after that to that 45.7 5 kind of area, then that gives us a wave 1 target up there at 52.62. And you said you were looking at what as far as the target goes?
The 200% Fibonacci extension off the thresholds that I have is at 53.02.
Right. Yeah. So again, getting us right up to that same kind of general area that it looks like we may be going here. Now, for my count in particular, if we drop down below wave 4 here, which is right around 46.88 here, that would suggest that wave 3 is complete at the swing high. And then we've got wave 4 in progress, which gives me actually a lower overall target. But for right now, when I'm looking at this, it looks like we had a flat here potentially for wave 4. And then this is, again, working on wave 5. Now, the other thing I was looking at here, there is the possibility, since this swing low is 47.09 and this one is 46.91, it's possible maybe this is wave 4 over here, and then this is a 1, 2, and we're working on a 3 and a 4, and then we'll get a 5 on that. And with that, because it would be it would be an ending diagonal for wave 3 here, and it's expanding, that wave 5 target could actually be where it is, or even up higher on that, depending on how it played out. Because wave 1's the smallest, wave 3 is the larger one, and often when you have that expanding wedge there as an ending diagonal, wave 5 will be larger than wave 3. They just kind of get larger there. So I can definitely see a few different ways that gets there. So I like your target there. And what does that mean, guys? Again, that means we shouldn't expect Bitcoin to necessarily, if we're getting something like that Bitcoin is actually done yet. That would suggest likely higher highs still to come. But you will see, remember, guys, when you're looking at rotation, right? So after the bear market bottom, you come in here and basically you have Bitcoin rallying, right? And a lot of times within that, you'll have the larger caps with it, like Ethereum, Litecoin, stuff like that's up there, right? But what we generally tend to look at is by the time you're getting to wave 4 and 5 up there, money is starting to rotate. Now, it doesn't happen all at once. It starts to rotate. And so then you see it start pulling out of Bitcoin and those profits and going into, again, a lot of the majors. But Bitcoin will still continue finishing out, its 4th and then its 5th wave. It just does it on much lower volume, right? I mean, that's the way we generally look at it anyway. And so don't expect that all of a sudden Bitcoin's done and all of a sudden you've got alt season. Alt season is this thing that just kind of flows, right? And so you get toward the end of Bitcoin's cycle, right? The 4th and 5th wave. Money starts flowing out of it into, again, the bigger ones, Ethereum, Litecoin, all those things. Keeps pushing them up a bit further. As they get to their 4th and 5th, money again rotates out of that. It goes to mid caps. Same thing, goes to small caps. Same thing, goes to micro caps. And then you kind of get back to that Bitcoin cycle there. And so that's generally how money flows through, if you guys aren't aware, through the whole kind of crypto ecosystem. Now, again, nothing is always never, right? And so you're still going to see sometimes, you're going to see, if it's in that part of the cycle where you've got mid caps, you might see some micro caps flying as well. Because it's not everyone definitely has to follow this, but in general, the money flows from Bitcoin to the large caps, to the mid caps, to the small caps, to the micros, and then back up into Bitcoin again. So just as a general rule of thumb, guys, that's kind of how you look at it. So let me see here. We got Ethereum here. Let me pull up Ethereum real quick. Let's see. Man, oh man. Okay. Let me look at a better chart here. Let's look at this one.
Hey, just so you know, Chris, I got a hard stop at 1:30.
1:30? Okay. All right. Let's jump through this real quick. Here is Ethereum, guys. Again, we talked about the idea that that we had this breakout. Again, this is, if you pull the volume here off the swing high back in April of last year to the swing low down here. Let me see if I can do this. Right here. Kind of moved a bit on me.
Is this a daily?
Yes, this is the daily right here. So this point of control here was the support, the resistance kind of area, and then right above it at the top of that block right there was the area. And then we had this consolidation up into this resistance. And so, again, I posted that there on Twitter and everything. Some people saw it. Basically, what we got, guys, we got the continuation up here. We got the breakout, pullback retested, and then big launch back up out of here. As far as the weekly goes, there we are. We're getting a big break above the weekly pivot here. And so if we continue going up here, I mean, I've got general targets here, 26, 24 kind of area. But we could potentially see 5 waves up all the way to 4,050 is what I'm potentially looking on there, depending on how it goes right here. But again, this impulsive move here above the pivot, if we can close that and get a little bit of follow through, I would be looking, at least at 26, 24, but really closer to the R1 pivot around 3,000, 3,100 before maybe we get a pull back to the pivot and then push out higher. What you got there, Fibbo?
Yeah, I'm long. I was long 20%, and when I should just say I'm long because it gets confusing when I say that kind of number. But I was long here in the bull zone, and it actually hit the target at 21.15, which I just took profit. I mean, literally hours ago, I think. And now I'm still 10% long at this price level. And also the shallow fib is at 1917. So if this actually dips down to 1917, I'll actually add more longs to it. But right now, this 10% long, the next target I have since this one hit, I go back once. It's kind of hard to explain, but like this first set of extensions, once the 200% hits and we hit a high, then I go back in history to a previous high to get the next set of fibs. And then that's where this 100% comes in down to this low. And then you get the next extension. I wonder if I can move it over so you can see it. It comes from, I just picked this high right here.
Oh, okay.
That's smack dab in the middle of this zone. Because a lot of times I'll say the next target's this zone, but sometimes you want to know where at in the zone.
Yeah, we're likely closer.
Yeah. So I put the next target at 24.51. So the 10% long that I'm at here, the next target is that one. If I buy the next shallow fib, the next target above that is 31.49.
And what was the first target there?
24.51.
Okay. And then then what?
31.49. Those are the next two. Because the way I always look at my extensions is once, say for instance, it gets up to this, the 127, 141 hits this target, and then it starts to retrace back, but it never gets to the shallow fib, so you never buy again. Because I'm always buying on the shallow fib dips, and then selling them out at the targets on the extensions. But if you get up to this point and it doesn't go back, another way I'll do it is if it gets to this 141% and we get 3 consecutive daily settlements above 25.38, then I'll actually buy because that level becomes support. And then I'll buy it and then use that 200% as the target. So a lot of times when I've done my threshold theory, when you look back, the percentages are really high, or the probability is really high of once you get those 3 settles above the 141% level, that the 200% becomes in play. It's a high probability that it goes to that level for that next target.
Yeah.
But you can get up to that point and it just holds resistance and it falls. And then you got to wait for the shallow fib level, wherever that's at that point in time, as your buy target on the way down. But everything's working so far. Went it right up and hit the exact target almost to the freaking penny. And then I'm working my way to the downside. I'll rebuy the shallow fib. And then I just got the next 2 targets if that happens. And that's really what I'm following here on the ETH daily.
So the goal is like Bitcoin, just as long as it continues going higher and shallow pullbacks, really just stop trying to short it.
That's the name of the game.
Great. Well, I know you've got to get out of here. Hey guys, listen, if you want to join in with Fibbo, you can go there to TexasWestCapital.com and scroll down the page there, and there will be the how to join his group there. My links aren't working on there yet. I've still got to get them up, but I want to get Fibbo on there so you can get in on that. Also, you said you're going to be with Crown later this month. Do you have a time and date on that?
Yeah, it's let me see here. Let me pull up a calendar. It is the Friday the 28th, We're going to record it. He'll probably upload it on Saturday morning, the 29th.
Awesome, guys. So there you go again. It was, I think, the last time he said he was on Crown there was when he had the April target there. So a lot of fun watching that. Let's put some pressure on him and make sure that he gets this stuff right again, so we can all be rich.
I hope so, because I actually on Crown Show the year before, 8 months in advance, I called the June low. So I got the June low. I got the next high, or the wherever we're at right now. But not say that I'm going to be right, but as long as the patterns are holding,
yeah,
it probabilities are nice, are very high that the pattern should continue. But if it breaks down, then we go to our alternate plan, and then we figure that out.
That's right, guys. It's all about figuring the plan and working with it and having ideas of what you're going to do if it doesn't work out. Right.
Yep. And it'll slap you in the face one of these days, so you got to be ready.
All right. Well, guys, that'll do it, I guess, here for us. Hopefully you've enjoyed Fibbo. I know he's always a lot of fun to have on here. He's got a lot of information there, a lot of great ideas. And, again, guys, it's just something that comes, with experience. And the longer you learn to trade correctly, not anybody else's particular system, but you just start understanding how market moves, the easier it becomes to kind of get in there and do the things that you want to do. You end up devising your own systems. For instance, as Fibbo has his threshold theory, you'll be amazed. It will come, guys. It will come. But again, it's the idea of understanding, getting your mindset straight first. Because if you can't do that, if you can't get your emotions figured out and get the psychology understood, you won't be able to move on to that next part where you start seeing the market correctly. And then you go, okay, well, now based on everything that makes me who I am as a trader investor, this is how I'm going to find to approach it. So there you go, guys. Where can they follow you? Is it what is your Twitter handle there?
Fibbo Swanee. I'm Fibbo Swanee everywhere.
Fibbo Swanee everywhere.
Yeah. So yeah, Twitter, TradingView, whatever. That's the name I use everywhere. So
awesome, guys. Well, there we go. Don't forget, again, Master Course presale ends tonight at midnight. You can get the Pivots Points Master Course there for $49. Starting tomorrow, it will be $499. But even more so, if you're really interested in learning how to do a whole bunch of different stuff, just getting a better understanding overall of markets and whatever, we do have the Master Courses bundle, which will be $499 until, again, midnight tonight. And after that, when we offer it again, it's going to be greater increase. But that's going to give you a new course, a new master course every month for the next 12 months, and 2 bonus master courses, one by Fibbo himself. Point the other way there. Fibbo himself with Fibonacci. And then I'm going to have one with her cycles. And man, just go to TexasWestCapital.com. There's the address right there, /pivot-points-MC. And read about it. And if you got any questions, feel free to send me a text or an email, a message on our server, Discord server there, or whatever it happens to be. Okay. As always, remember, the only thing that you control is how much you lose, guys, as traders. That's it. The most important thing you do day in and day out as a trader, the most important thing is your risk management. Okay. That'll be it, guys. We'll be out here. We'll be back on Tuesday. Tax day here in the U.S. Maybe I shouldn't. We'll be back on Tuesday, 11 a.m. Central Standard Time. Hope to see you guys then. Have an amazing day. Take care, everybody.